The modern mortgage market has become a complex and often misleading web, trapping unsuspecting borrowers into financial commitments that span decades. It's time to take a closer look at why modern mortgages are essentially scams, built on practices that prioritize profits over people. First, let's dissect the numbers. Imagine taking out a $300,000 mortgage with an interest rate of 4% over 30 years. At first glance, 4% might seem reasonable, but when you do the math, it's anything but. Over the course of those 30 years, you would end up paying a staggering $360,000 in interest alone. This means, to borrow $300,000, you ultimately pay $600,000 to $60,000 back to the lender. This is a ripoff of colossal proportions. The fundamental issue lies in the interest rates themselves. Even a rate over 1% is excessive when dealing with loan amounts in the hundreds of thousands. Banks argue that these rates are necessary for covering risks and inflation, but the truth is far more sinister. Banks are already protected by government policies and have mechanisms to hedge against inflation. They don't need to charge such high rates to remain profitable. Instead, they do so to maximize their profits at the expense of borrowers. Now let's talk about the government's role in this scheme. Banks and financial institutions are heavily intertwined with the government, enjoying protections and bailouts that the average citizen could only dream of. Given this safety net, the idea that banks need to bake in high inflation hedge percentage points into their loans is absurd. In reality, these institutions have a significant influence on inflation themselves. By raising interest rates under the guise of managing inflation, they contribute to the very problem they claim to mitigate. This brings us to the heart of the scam. The mortgage game is rigged in favor of the lenders. Banks profit immensely from high interest rates and long loan terms. They know that many borrowers will struggle to keep up with payments over such an extended period. Defaulting becomes a real possibility, but that's not a downside for banks. It's an opportunity. When a borrower defaults, the bank reclaims the property and sells it again, often at a higher price due to market appreciation. The cycle repeats, and the bank profits twice or even thrice from the same property. Let's pause and consider the implications. The only way to win this game is not to play. Instead of diving into a mortgage, which can essentially become a lifetime of debt, consider an alternative path. Saving up and purchasing what you can afford is a far wiser strategy. It might take a decade or more of disciplined saving, but in the end, you'll own your home outright without the burden of exorbitant interest payments. This approach not only saves you money, but also liberates you from the clutches of the banking system. But why don't more people follow this path? The system is designed to discourage it. Society places immense pressure on individuals to buy homes as soon as possible. Renting is often portrayed as throwing money away, while homeownership is touted as the ultimate goal. This narrative is pushed by those who benefit the most from it, the banks and real estate industries. They know that as long as people are eager to buy, the cycle of high-interest mortgages and defaults will continue. Moreover, there's a psychological aspect to consider. The dream of homeownership is deeply ingrained in our culture. It's seen as a symbol of success and stability. Banks exploit this desire, offering mortgages with seemingly manageable monthly payments while hiding the long-term costs. By the time borrowers realize the true financial burden, they're already locked in. Another critical factor is the deceptive nature of adjustable-rate mortgages, ARMs. These loans start with low interest rates, luring borrowers with the promise of affordability. However, the rates are not fixed and can increase dramatically over time, leading to skyrocketing monthly payments. Borrowers who initially believed they could manage their mortgage find themselves in financial distress when the rates adjust. Furthermore, the complexity of mortgage contracts plays a role in perpetuating the scam. These documents are filled with legal jargon and fine print that most borrowers don't fully understand. Hidden fees, penalties for early repayment, and clauses that favor the lender are common. Borrowers sign these contracts, trusting that their lender has their best interests in mind, only to discover later that they've been misled. The issue also extends to the broader economic impact. High-interest mortgages contribute to wealth inequality. The average person, struggling to make their mortgage payments, cannot build wealth in the same way as those who can buy properties outright or invest in other assets. The cycle of debt keeps them financially tethered, limiting their opportunities for economic advancement. So what's the solution? It starts with awareness. Understanding the true cost of mortgages and the exploitative nature of the current system is the first step. Financial education should be a priority, empowering individuals to make informed decisions about their money and their futures. Next, there needs to be a push for regulatory reforms. Governments should step in to protect consumers from predatory lending practices. This includes setting caps on interest rates, simplifying mortgage contracts, and increasing transparency in the lending process. Banks should be held accountable for their role in perpetuating the cycle of debt and default. Finally, a cultural shift is necessary. We need to redefine what success and stability mean in terms of housing. Renting should not be stigmatized, and the idea that homeownership is the only path to financial security should be challenged. Communities can promote alternative models, such as cooperative housing and shared ownership, which offer more affordable and sustainable options. In conclusion, the modern mortgage market is a scam that benefits banks at the expense of borrowers. By charging high interest rates and profiting from defaults, banks have created a system that traps individuals in a cycle of debt. The only way to break free is to opt out of this game entirely. Save diligently and purchase what you can afford. It's time to rethink our approach to homeownership and demand a fairer, more transparent system that prioritizes people over profits.